Now, let's take another look at another very important pattern. And just as much as the stop run is an anomaly, also big orders are typically an anomaly. We want to capitalize on order flow anomalies that can reliably make us money. So big orders and iceberg walls are definitely one of them. Big orders are much more common than iceberg walls. Iceberg walls are way more rare. They used to be much more common in the markets, but they're worth mentioning because sometimes they'll happen in low liquidity environments, and that's a feast. So the first thing we want to see when we see absorptions in big orders is, for example, in a 1 minute candle in the ES, we want to see at least 1,000 contracts. Okay, that's our minimum threshold. We want to see a lot of green or a lot of purple based on the delta. And in these situations, if there's a huge order in the wick of the candle and price rejects from it, we know that that big market participant is dominating the market. If price were to do that and then break, we know there's something even bigger that's going to push price up. So whenever we have a huge trade above 1.2K contracts in an ES tick, 1 minute candle, and a rejection, that's a good indication that we could continue to go lower. If we have a closure of the candle above this, then we could keep going up. And here is a very clear example of the same thing. We closed the candle below and we started auctioning lower, and for that session, spoiler alert, we went down the whole freaking session. Same thing over here. So we want to take a look at the footprint. We see that there's an anomaly here, right? We have 1.2 thousand contracts in a single tick. That's a big order. That's either a big order in the book or an iceberg. You can discriminate if it's an iceberg or just a big trade by looking at the depth of market. And in the depth of market, what you will see here is a big order, right? In the DOM, in the aggressive, the passive buyers. That's how you know it's just a big order. Otherwise, you will not see it at all, and then you know it's an iceberg, which means it's a small order that's simply reloaded a bunch of times. And as you can see here, we don't candle close below this. We don't manage to close. The following candle is an upward candle, and we push up. Here we have another example shortly after of a passive buyer trying to block the upward auction of sellers, completely ran through, no candle close, and we keep auctioning higher. So you take these reference points of big trades and you see what does price do after. Well, that's a good indication of where price will likely keep going. But sometimes you might see situations like this. You're not going to find a lot of them, guys, but if you find them, well, if I find them, I will take advantage of them. It's not financial advice. But you can clearly see here that sellers are trying to go down, and there's a big buyer here, 260, and what happens? Bounce. We drop back down, bounce, drop back into it, bounce, drop back into it again, bounce. This is an edge you can capitalize on. This is called an iceberg wall. Okay, they're literally punching to the wall, and nothing moves. So this is a very big order, that we can front run and buy from, earn a couple ticks, wait for it to come again, so take profit, buy again, take profit, buy again, take profit, buy again, take profit a couple times, and then 90% of the time it will be ran through, and we can opt for a breakout trade. They will do something called momentum ignition. You'll see a bunch of market order being shot into the market all at once, sort of like a stop run, and that's potentially a good entry for a sell. And that's how we trade big orders and iceberg walls. Here you have another example where there was a big order here, caused a bounce, and then price just ran through it like it was nothing. Momentum ignition, a lot of imbalances, market orders, that's a good sell setup. This is all scalping dynamics, by the way. And we dropped down for the rest of the entire session. But we had a big fight. Who won the big fight? Aggressive sellers. Well, that's where I'm joining the party. I want to stay with the winners. And I can clearly see, thanks to order flow, unlike with any other price action chart, what the big money, the smart money is doing. This is another example where we have a big trade over here. Candle closes below. We test it. We don't manage to have any auction above here, and we keep dropping for the entire session. This is another example where we had a very aggressive auction, a lot of imbalance, a lot of green going on. And then you had absorption here, absorption here, absorption here. These are all big orders. And they form this sort of liquidity pocket, this area where there's a lot of trading going on. Absorption on both sides of the auction. And in this type of situation, you see it's the same, exactly the same level. This is disturbingly accurate. But at the end of the day, what happens? We auction higher. Well, now we know where to go. Now we have a clear direction. We have a clear understanding of which one of these big fishes have won. Because it's not retails. It's not phytoplanktons. These are whales putting billions in the market every single minute of every single day. And we have undisputable proof of who has won that battle. And we want to be on the right side of that battle. Another example here. Big order, big absorption. Is there any candle at all that closes above here? No. What happens right after? Sell initiative, imbalances. Okay, you know what? Guess what I'm going to do when price comes and test it? One way out. Pure objectivity, pure raw data.